Good afternoon, everyone. Glad to see so many of you joining us. I think 60 delegates in the room so far, and still filling up the lobby as we speak. I'm Michael Avery, financial journalist, host of Classic Business on radio in Joburg and Cape Town, anchor of the Covid-19 Business Watch Daily Show on Business Day TV, and editor of Catalyst Private Equity magazine for my sins too. Now, deliver some rich insights during the next 60 minutes as we take a walk through the impact of COVID-19 on the evolving landscape of the insurance industry. And insurance is one of those things. It's one of those products that really is sold rather than purchased. You don't wake up in the morning really getting excited about going on to Takealot and buying some insurance or going off to the shops. But I think it's at a time like this that you really realize how important good insurance cover is. At a time of crisis, it certainly magnifies the importance of insurance. It's like shock absorber, and today with COVID-19 top of mind, I think we're going to unpack what that means for you and for me as consumers of these products. Do all policies do what they actually say on the tin? Just briefly, I'd like to thank our partners on this journey, Mail and Guardian, and new editor Sipho Kings, who points out today, in fact, that in a poll by the Reuters Institute for the Study of Journalism, so entirely independent, this based at Oxford University, the Mail and Guardian emerged as the most trusted weekly publication in South Africa. And the report is based on a poll held in January with more than 80,000 respondents in 40 countries. So really phenomenal achievement that by the Mail and Guardian. And to our sponsors, ABSA too, who are, as I've been saying for the last few weeks, displaying typical Africanacity in these uncertain times and supporting fora like these to bring all of the stakeholders together to help us understand what the future holds during such difficult times to actually forecast. Now, to you, the delegates, thanks so much for supporting not only independent journalism, but supporting these webinars as well. And just remember that at this time, I think we need you, the consumer, to go out and support a strong, free and independent media. And it's something that I've been hammering home on my various shows as well, because I think many people are rubbing their rands over 2 or 3 times before they spend a cent today. And we certainly need strong, free, independent media to be well supported. So I'd certainly encourage you, if you're not a subscriber to the Mail and Guardian, to go and support, according to Reuters, the best weekly publication that we have. Now, just to mention some housekeeping rules, you will have access to ask questions directly to our presenters and post comments in the chat session, and we'll respond to those during the course of the webinar as much as we can, and there will be a recording made available post the event as well. So who do we have for you today? Let's welcome firstly Eugene Strauss from ABSA. He's been managing executive of ABSA Life Insurance and Pan Africa ABSA Life Insurance since March of last year. He's a member of the South African Institute of Chartered Accountants. He holds a master's level qualification in strategy and innovation from the University of Oxford as well. Also holds a BCom accounting and BCom honors accounting from the University of Pretoria, and has got 14 years prior experience in various finance leadership roles within the financial services industry, and has held positions at ABSA Life Limited, the Liberty Group, Capital Alliance, and Rentmeester Assurance as well. And is a family man, much like I am as well. Loves being active. So, Eugene, I'm sure you've been equally frustrated as I have during this lockdown, where we've been unable to go on the usual hikes until recently and do all the things that we love to do. But thank you so much for joining us. And the rose amongst the thorns today is Ineke Prinsloo, is head of Client Insights, a divisional head at Consulta, and that's the company responsible for compiling the annual South African Customer Satisfaction Index. It is the go-to index in the insurance industry. Ineke's divisional and strategic leadership for Customer Insights serves on the management committee of the organization, ensuring that the overarching goals, strategies, plans, and policies are achieved. And really is a great pleasure, Ineke, to have you on the show. You've been involved in the industry for well over 2 decades now, so certainly someone who understands insurance better than most out there. Now, I've got to start with a little bit of a joke, and you'll forgive me, all the actuaries in the lobby, but an actuary an underwriter and an insurance salesperson are riding in a car. And the salesperson has his foot on the gas, the underwriter has his foot on the brake, and the actuary is looking out of the back window telling them where to go. And I think insurance can feel like this for so many on the outside. So over the next 60 minutes, we're going to try and demystify things a little, and why sometimes you have to look in the rearview mirror to go forward in insurance speak, and how we actually do that during times of such heightened uncertainty that COVID-19 introduces. And I think, Inika, on that point, kick us off, because as South Africa's economy goes into free fall following the financial impact of COVID-19, we see job losses day in, day out being announced. Just yesterday, it was ArcelorMittal. There's been 10 years before that of economic decline as well. I think life insurers are going to face one of their toughest battles yet to retain and grow market share. And I think all insurers are heading into an environment where consumers are going to be under tremendous financial pressure. So they're going to be examining and questioning the value proposition of all of their financial planning solutions, not least of which is insurance. Now, you look at this, you look at the sentiments and the views expressed by customers in the Customer Satisfaction Index, the SSCSI as it's known for life insurance. Tell us a little bit more, firstly, just to set the scene, about the survey, how it's conducted, and what you're really looking to understand about customer attitudes towards life insurance.
Thank you, Mike. Thank you for the invitation, and welcome to everybody that is logged into the webinar. We're going to have a great conversation. So exactly what you said in the beginning: support a free press, support an independent press, and a press that you can trust. And this is, I think, maybe a very good starting point in terms of the SSCSI. There's many of these benchmarks out there. And it's really about understanding what is a benchmark that has credibility, has got history, it has stood the test of time. Now, the SSCSI Consulta runs the SSCSI in South Africa. We're the only license holder in the African continent. It is actually a model that started in 1994 in the USA, and it's implemented across different markets across the world. I think last count about 23, 24 markets. And it's a very simple model, but it's a model that stood the test of time. The Americans, for instance, has started a fund on the New York Stock Exchange, and they only have invested in companies that do well on the model, and they've actually outperformed the stock exchange by 5-1. So, you know, customer experience makes financial sense for businesses. Yeah. So it's an independent. We run it since 2012. And we've done it in a couple of industries. To date, we've done about 450,000 interviews, and we run this annually across different industries. Very, very shortly, because I think that's going to anchor our conversation today. It's a simple model, as I said, but we talk about customer expectations. So what do you expect from a brand? What do you expect from your long-term insurer? And that expectation is really informed by three things. So what is the role of the marketing? What is the messaging that we put out there? What was my past experience? And what do I get feedback from those I trust? So as South Africans, we make financial decisions and we create expectations based on what our peers and our trusted sources say about brands. Then we ask around experience. So the next question is, so now you've interacted with a brand, and maybe just when we do get responses from people, there's a criteria. You have to have had a product with the company, and you have to have had interaction with them. So we're not asking you, you've seen something on a billboard and now suddenly you have an opinion about the brand. It's an informed opinion. So now you've experienced the service and the products. What is the quality? Does it speak to your needs? Is it reliable? Then we ask an interesting question, which I think we're going to touch on today, is around value for money. Do I think I got what I thought I paid for? For insurance, I think it's extremely important. There's a monetary exchange for what I'm thinking I'm going to get in a crisis situation. That then rolls up into a satisfaction score. Then we've got two extra questions or two extra focus areas that we focus on complaints. And I think there's also an interesting discussion because as consumers, we see a lot around the ombuds and the complaints channels that we have, and how can I actually let the company know that I'm not satisfied with something. And then loyalty. And loyalty is a very interesting question. And I think if we can focus on that as well, because for our consumers, it's not just one question. It's about, would you retain, or what's the propensity that you will remain with the brand? And if you do, what is the price elasticity? What's your price tolerance? And there's an interesting finding on that. The purpose of this for brands is obviously to understand, so how do I compare to my peers? How competitive am I in category? And what does good look like? What do I need to aspire to from a customer experience perspective? Consumers that participate in this co-create with brands. And this leads into conversations like we have today, where we interact with the industry and consumers and brands have the opportunity to talk to something that we all can hang our hat on.
And you remind me of what Warren Buffett famously said about price is what you pay, value is what you get. And we'll come to the value conversation. But just firstly, after that beautiful introduction and summation of what the survey is all about, let's zoom in then on customer satisfaction and what your latest research reveals about whether or not South Africans are actually satisfied with what they're getting from the long-term insurers.
Sure. So I'm going to hook it on 3 or 4 talking points. The first one around holistic financial solutions. Now, for a long time in South Africa, we've been talking about integrated financial solutions. From a consumer perspective, that means that I have all of my financial solutions with 1 or 2 providers. It's a long time in the making. And interestingly enough, the first finding for the long-term insurance category is that the banks actually did much better than the traditional insurers. All of the financial services are focusing on this integrated financial proposition to consumers. And for the long-term insurance, the traditional insurers were actually, the bank insurers did much better than what the traditional insurers did. And it really is around that integrated and that digital solutions that the banks have been able to roll out much faster and to the satisfaction of consumers. And then specifically around something like credit life, that we're starting to show tangible value. So that's the first thing around the holistic financial solutions. Then around financial planning, the second one, the game has changed. Financial planning has changed. Our regulator has tried to change it for a long time, but it has changed. So consumers and the discretionary spend that's much lower, we are going to scrutinize exactly what you said in the beginning. Consumers are going to scrutinize every penny spent on financial services. And it's not going to be about just having a digital solution from some of the other research we did. So we understand that it's integrated, we care about people, there's efficacy and there's simplicity. When we get it wrong, the third point, for the long-term insurers, when we get it wrong, the breakdown is on 3 places. It's on reliability, and incidentally, ABSA did extremely well in this category, where we talked about the quality and reliability. And if you think about this, almost safety for an airline. The same thing is that your long-term insurance needs to be reliable, because I'm not going to be there if it's a death claim. Yeah. If it's a disability claim, it's in my time of need, and I think we can focus on that. When the product doesn't talk to my overall needs, and when we don't address complaints, and again, ABSA has done in this study very, very well in terms of the things that in general long-term insurance have gotten wrong over time on the reliability, the overall needs, and the complaints. And the last thing I would really talk about is the fact that we as brand managers would want consumers to talk about our brands. We want that recommendation. But the loyalty in the long-term insurance industry, we saw in banking that 1 in 4 people said, I will change my bank. And it was not the same for long-term insurance over a very long time. But we see that loyalty is under pressure. When we ask the consumers, well, how do you feel about the brand? There would be some sense of loyalty, and would you move from the brand? Not. But would you talk about them? Not really. And it's actually a negative sentiment that comes through. So really 4 things: holistic, personal, financial, where we get it wrong, and how we look at loyalty.
And I've long actually held the view, Eugene, to bring you in here, that it's actually going to be an environment as we see, the holistic financial service offering, where the banks will probably come to the fore quicker than the traditional insurers will. I go onto my online banking channel almost daily. If I have an online insurance channel, well, I might go on when I'm claiming or on the odd occasion, but I don't have that regular touch point. How has ABSA managed to build out its insurance product to now come first? I see ABSA Life came in at 83.2 top of the customer satisfaction pops.
No, thank you very much, Michael, and thanks for the opportunity. And also just wanted to say, yes, I'm very relieved to be out and running again from time to time. So, yeah, I must say, I think we do feel extremely proud of what we've been able to achieve from a satisfaction from the SSCSI survey results perspective. And I think it's because it actually shows, it proves true what we've always believed, and that I think you're asking the question around how we've built that out. I think it starts with realizing that, yes, I mean, life insurance is a grudge purchase. But what we've really pushed ourselves on is to understand that it's actually quite emotive as well, in the sense that, when you buy life cover, you actually want peace of mind, and consumers at the moment are obviously under quite a bit of distress. There's a lot of anxiety, a lot of uncertainty, So when you actually design a product and you offer it, you got to design and offer it in a way where people understand what they're buying. It's got to be simple. It's got to be something that you can explain to them well. And because when it gets complex, people start to doubt whether they really would understand whether the benefit would pay or not. So we use simplicity quite a lot. I think the other thing that I wanted to say that we absolutely believe in, though, is it also talks about an ethos of or a purpose of why we believe we exist. Because that peace of mind talks to something we believe is quite caring. Because when you actually settle a claim, when that magic moment arrives when you're being tested, it's a very unfortunate time in the life of the customer. And we don't see claims just as a way of a financial transaction. We actually see what it enables, which is when something bad happens to you in terms of your health, that you can sustain a certain lifestyle. When it's in the unfortunate event of death, it obviously enables the future generations' possibilities. And I think we've driven that quite hard, as to say, you have to have like a strong sense of purpose of why we actually really exist. It's about that peace of mind, and it's about, when you're paying that claim, you're actually enabling a future generation's possibility. And when you start to take on, reflections like that in terms of, why you actually exist, you see that, the behavior you see within an organization is different, in the sense that, you start to design products with that in mind. You start to think about every interaction with that in mind. So I think there's a big part of also culture that drives, in our view, what we see in those scores. Then couldn't agree with Ineke more in terms of what we see as a fundamentally strong value proposition that banks have in life insurance, and that is that accessibility point. I mean, the point you make is so true, in the sense that if you look at how often banks interact with customers, there's so many opportunities for us to position something. Banks also know quite a lot about customers in terms of what phases in their life they're going through. For example, when you're buying a house, and these sort of things. And those are good times to look at life insurance. And if we use that information responsibly and package and offer products specifically suited to your needs, we've got such a compelling value proposition. But also, if you just think about, for example, at claim stage, with us understanding what's happening in the financial affairs of a customer, it's much easier for us to also proactively start to identify when there's been an event that the life insurance might be applicable, and then from ourselves try to drive out that this payment of that claim to settle that value. So I would say, I think from our perspective, we're very pleased with the result in SSCSI, and I think fully agree with Ineke in terms of the categories of items she's identified. When I talk about the scare and this purpose statements of why we exist, that talks to that trust factor. Customers want to know you'll be there for them when they want to claim. That accessibility, the data we have, the access to the customer, and how you use that in a seamless way. And I think the only thing we haven't touched on, though, is, we do also acknowledge that sometimes things will go wrong. But I think what we really pushed quite hard is that if that does happen, to really put the customer hat on and thinking about this from the customer's perspective, and then respond quickly and still deliver on the original outcome that we wanted to deliver for the customer. So I think those three combinations of things are a big driver of that. And it is also a reason why we do believe that banks can play a significant role in shaping the life insurance industry.
And Ineke, you mentioned earlier this move that we're seeing, particularly amongst banks, to offer holistic financial services. And we're seeing insurers getting into that space as well. It's a crossover everywhere. But how important is it going to become to the end user to be able to offer all of these solutions under one umbrella? Is that going to be, I mean, once everyone does it, does that become a differentiator anymore? What then differentiates you when everyone is offering every product under the sun?
I think, Mike, very interesting question. We asked our community, so we've got a big consultant online panel community, and we've asked them to give us some feedback around how they look at financial services. And at the beginning of the lockdown, and I think it's quite pertinent to talk about that, the beginning of the lockdown, it was around income continuation. And if we see where the psyche of the consumer is right now, it's back to basics. It's about safety, security, and income continuation. So while we as brands are focusing on our strategies and our 2 and 3 year strategies, consumers are back to basics. We need to meet consumers there, and they're almost restarting the journey. And also what I said in terms of the SSCSI, where the consumers are saying, I'm going to scrutinize every penny I spend. So I think from a strategy perspective for the companies, it would be about the differentiator. The consumer is at a back to basics and saying, make sure that you care about me, make sure that you have the integrated platforms that work, and that you show care and make it personal. And I think there's a really big gap there still. Again, in the study, in the beginning of April, the consumer said, it's fantastic that the banks and all of the insurers are offering relief, but it's a blanket relief, and it doesn't speak to me. And a lot of that relief was conditional, and it was quite complex. And for a consumer, that differentiator is going to be whether we can get the integrated financial solutions, digitalize it, have it accessible, but making sure that it does have the elements of individualization. It talks to who I am, and I'm a consumer under pressure. We had a debt-ridden consumer long before COVID. Now we're making our value propositions conditional and complex, and we are moving into the digitization. So yes, where the company is focusing on their strategy, the consumer is back to basics. So I think the differentiator is almost pushed way down the line in terms of getting back to what the consumer needs are. And then you have a changing needs, and we can talk about the insurtech a little bit later. But in terms of that consumer, I think we haven't tapped into the insurance market in South Africa yet on why needs are changing. We see that in the survey. Eugene spoke about the value for money as well. Value for money is when I get what I thought I paid for. But value for money is very under pressure in terms of this SSCSI for the long-term insurance category. We're not getting it right. So long before we're going to get to a differentiator, first as an industry, we've got to understand what is it that I pay for, the trade-off between what I pay for and what I'm getting for that premium. I think that, for me, kicks the differentiator for brands a little bit down the line now.
Absolutely. Eugene, as we welcome you back again, as a non-traditional life insurer, and while consumers are out there looking for value, how does one demonstrate value? How does one demonstrate trust if you're playing in a space where you aren't seen as the traditional provider of a product or service? How have you gone about approaching that?
No, thank you very much for that, Michael. Look, it's something that we obviously we obsess about all the time, and I think just to make a couple of comments around the value point, what we've also found, and I actually we see a similar trend in this Access survey, is that because trust is such a big driver of the life insurance purchase, we find that there's historically been a lot less price sensitivity, in the sense that people are willing to keep the cover intact if they understand that it will be paid and they trust that. That being said, though, I think one of the things that we are obsessing with now is obviously that is now starting to change. But what we've done in the past is we've really tried to look at how do you maximize that value to that customers. And there's a couple of things that we've looked at. I think the first thing to say is that it's not always about price, just about price, as I've said. We've also then looked at for that price, what are the benefits you provide. I think we always looked at it from the perspective of saying, look, you've got to be, from a benefits perspective, on par or better, and then trying to offer that, at a lower price if it's possible. Because I think what we've been able to do in that regard is, remember, as a bank, because you've got that, accessibility to the customer, and I use some of the bank's infrastructure, and we've got quite a scale book. In fact, we've got about 4.5 million policyholders. So we've got quite a sizable book of customers. And what you're then able to do is you've been able to spread that cost. You've got a lower cost model. You don't duplicate interactions with the customer, and you have to pass that benefit on to the customer. So when it comes to price point, we try and say, let's get the benefits as comprehensive and competitive as possible, and then offer that at a price point that's attractive by sharing some of that value back to customers. I think what we try to do in that as well is, and I mentioned this point before, it's also simplicity. We find that, very complex solutions, difficult for consumers to understand, results in difficulty, not just in administering and running the business associated with it, but also for the customers to understand and direct that. And that's the other way we're looking to do this. So to do it simple, to use our scale benefits we have, our access benefits with the bank, and then that influences our product design. But I think the thing that we absolutely believe most in as a non-traditional life provider, in terms of how we will set ourselves apart, is it's not about what you say, it's about what you do. And I think when I talk about that culture of actually showing up for customers when they need it, that the way we treat our people, the way we drive our people to think about our life insurance customers, that's the way, it's in that every interaction, and that every time you show up, that's the thing that we ultimately want to drive more and more. So I think for us as a non-traditional player, it's about making sure that where we have scale benefits of accessibility, we share that value with the customer. We make sure that our benefits are comprehensive, but we also then do understand that we then need to live up to what we've promised. The last thing I would say is that flexibility. I think what we're seeing more and more, and COVID-19 has tested us on that, is to say, look, we need to understand that if there's value been built up in policies, when a consumer is under pressure, we, for example, need to partner with them. And one of the ways that I believe that the life providers will be flexible in a constrained consumer environment will be the ones that will survive, is, in one of these examples is, for example, we look now at customers with standalone life cover, so policies not associated with debts. We've gone and said, on average, you can skip between 2 to 4 premiums a year, and the cover will stay in place, and we will only recover that missed premium at claim stage. In a time like this, what we've introduced in addition as a concession is we've said, well, we will take that from 4 to 6. And what that means is, we know that, customers at the moment, they're feeling the pinch right now, but there's value in the life cover, and therefore we're giving them that benefit to recover at that stage. So flexibility in how you respond quickly to what you're seeing for your customer, is another way that we see that. And I think the benefit of a non-traditional player is we don't necessarily have all of the legacy that you would have in big, large life corporations of the past. So we see those points are the ones we're driving into setting ourselves apart.
Yeah. And that competition is just benefiting consumers at the end of the day. And as we see that kind of innovation and flexibility into the market, it's only going to be to the consumer's benefit. There's a question here from Seema Matthew. In a post-COVID world, what is the consumer expectation from brands? And I think it's a broad question, but it's an important question, because I think now more than ever, brand promises, to Eugene's earlier point, are going to be tested. Does the product that I purchased several years ago actually do what it says on the tin? And I can think of examples on the business interruption side where certainly a few insurers have not lived up to potentially what their promises were on the tin of the product. So how do you see consumer expectations from brands shifting through COVID-19?
So if I can answer that again, it's a very interesting question. Thanks, Seema. Certainly consumers, as we said, specifically for the life insurance, is around that integrated offering, accessibility. Digital is we've almost reached parity in terms of digital in South Africa, and we've got a couple of challenges in terms of digital. It's not an expectation. Certainly from all of the key drivers that we do across all of the South African Customer Satisfaction Index categories, interestingly enough, when we ask consumers, what are those key drivers? What are the most important things for you? The digital conversation is always at the lower end. So it is important to consumers. But then when we go into the company executives, and I always step on the toes because I identify whoever is the CIO, and then I say, you don't need a digital strategy. And then that makes for very good conversations in executives, because then I'm starting to challenge people. But it's from a consumer perspective, is that digital is parity. Digital is important, but consumers are back to basics. There's three things. They're back to basics. It's safety, security, income continuation, connection. How do you connect? And then people's coping mechanisms are being challenged. Those are the three things. If we go into the psyche of consumers, as long, and I think Seema's question was very, very much around, so what's post-COVID? It's accelerated our adaptation to technology. So the expectation will be from the financial services to make sure that I do have the accessibility, that I do have the integration. But again, if we go back to that old Maslow's theory of the basics, Wi-Fi is one of the basics, but the basics of the human psyche now in terms of safety and security. And that's the value proposition of long-term insurance, is safety and security. So in typical corporate speak, it would be the table stakes that they would talk about. In consumer speak, it's the basics. It is the basics. We have to ensure that the basics are in place. It's no longer for long-term insurance a crisis sell. Because that's how we sold long-term insurance. We sold it now based on the future crisis that will happen. What is the tangible value? So consumers back to basics, connection, the acceleration in terms of the COVID-19 to work this way. And then long-term insurance specifically is about showing the tangible value now. In short-term insurance and the medical industry, I interact with you more. But how do we show the tangible value right now? And making sure that we meet the consumer where they are right now. And that is back to basics and not on a very advanced journey.
Eugene, when we talk about back to basics, and you mentioned the value conversation earlier, I think what might be confusing to some consumers is how you actually measure product A, product B, product C, and whether or not I'm getting value. Because ultimately, you will only ever know whether or not you're getting value at that point of claim. So it becomes a somewhat intangible, ethereal thing to measure. How should consumers be thinking about the price that they're paying versus the value that they're going to get from a particular solution?
Yeah. Look, I think, Michael, it's a very, very important point, and I wanted to answer that, just latch on to some point that Ineka's raised around digital. What we've actually experienced is, with added anxiety in the system at the moment in terms of, there's so much uncertainties, people still value some sort of a human conversation. They would do a lot on the digital platform, but we found that even where we've given customers sometimes digital capabilities, they would still call us. We found that during COVID, for example, average call times on our contact centers have moved up by almost a minute. And it shows you that, wanting to be reassured to that conversational style thing, that that people will be there. And I think that adds to the point for me around, I think one of the things that we need to keep saying is that, I think when you're uncertain about whether you're comparing like for like, is to make sure you talk to someone. I think we fully acknowledge that, what we deal with on a day-to-day basis is not always well understood to the end consumer. And I think what banks again can do, we've got a lot of FICE accredited advisors, but we also have FICE accredited people just on contact centers that can talk you through, what you've bought, or, that you really understand it, because that conversation still helps people understand that. I think some of my general other advice around making those comparisons as well at this stage is you do need to look at, the track record of a company for paying claims. What is their sort of track record like with the ombudsman? What's the track record like on the SACSI survey? That starts to give you an indication of how different companies perform. I think what I also always tell people to do is don't just look at price, look at price plus benefits. I think one of the things, just also maybe latching on to Seema's earlier question is that we've certainly seen is that people used to associate life insurance only with death or mainly with death, which is understandable. I mean, that's largely how we solved it. But there are other benefits in life policy which are actually quite valuable. For example, permanent disability, temporary disability, loss of income or income protection type benefits. And we find in the past a lot of customers would, because of price sensitivity, opt for a product which gives death only, but at the cost of some of the other benefits, critical illness, etc. So really delve into the benefits piece as well when you're trying to compare like for like in that regard. And then I would say, the last thing that I would say is to look at, how accessible is that provider? How often do they talk to me? How often do I talk to them? How can I get more access? Because I think that the challenge we've also seen is that people buy this, they disconnect from it, and then years later realize we didn't completely understand that. So we're driving a lot more ongoing conversations to refresh customers' understanding around what they've bought. For example, we've got a large funeral book, and we've launched recently a WhatsApp chatbot where you could just engage through WhatsApp and answer questions around your policy. That engagement, continuous engagement, also helps you make sure that you really understand it. So yes, I mean, look at the track record of the company in terms of its reputation for paying claims. Don't just look at price, look at the other benefits. Specifically consider benefits while you're alive. I mean, they also offer lots of value. And then, look at, how easy is it to access and how you experience it. And when in doubt, talk to an expert. I think that is always something that, in banks do have that.
I mean, my personal experience is one of quite, it was a great experience when it came to my partner having to claim after suffering a serious brain hemorrhage. And it's one of those things, dread disease cover, that you hope will never happen to you. But when it does, and it's there, and it then pays you out through your rehab and through a period where you can't work, you actually wonder how you would have ever survived without it. And I mean, one really has to do a lot of one's own due diligence and research into this, because it is such an important security and safety net for your lifestyle. It gives you that peace of mind that you mentioned. I just want to add on to a point you made about whether or not we fully understand what it is we're buying. And there's a question here from Nwandle Modibedi, who asks, are current short/long-term policies covering the current catastrophic event? And I would assume that's COVID-19. And if so, as an SMME who lost income, can I claim against my long-term policy that covers retrenchment? Now, it's obviously policy specific, but I don't know if you could just share some light as to whether one can.
Sure. I mean, there's broadly two types of covers when you talk to SMMEs. There's obviously the business interruption type cover that's been a topic of a lot of discussion in the short-term industry. It's not something that we offer as ABSA. It's a line of business we've exited. So we wouldn't talk about that too much, but there are, that is one area impacted by COVID. Other than that, yes, I mean, what you would find is, so largely there's two sort of buckets of life products. The one is almost individually underwritten products. The individual underwritten products, what you tend to find is, they do vary product by product. And some of them either have embedded in the product or as an added feature, an income protection type benefit. It won't cover necessarily something for retrenchment, and there are a couple of products out there in the markets where you could buy retrenchment cover as what they call a rider benefit or an add-on benefit. But in general, what we've seen is very few, let's call it individual life cover policies that you've purchased have some sort of a retrenchment cover, other than potentially if you've become temporarily disabled to work due to ill health, or you are unable to work and you lose your income, there could be income protection benefits. And it talks to the earlier point is to really consider that in your portfolio of products as well. When you're taking out a cover, think about whether you have that. But again, still not covered by retrenchment. And then you have the credit life type products, which are priced more as a pool of risks, so we don't price for individual risks. And there are still a number of differences between products and product providers. The regulation does stipulate which benefit types have to be covered under credit life policy. death, disability, temporary disability, and then a loss of income type benefit. However, what exactly isn't covered in that is subject to the individual terms and conditions. So what we have done, however, is we've looked at that. Obviously, those policies have built up over years, and we've looked temporarily as APSA at how do we make concessions to be there for our customers. So what we've done is we've said, look, considering what the impact of lockdown and COVID-19 would have on people's ability to earn income, we've gone and said, look, instead of, some policies only cover very formal retrenchment, so you were full-time employed and you've been retrenched through a Section 109 process, whereas other policies would have covered, other forms of loss of income, like you're a contract worker and you've lost your contract due to COVID-19, etc. We are temporarily extending that definition to cover a wide range of events. So what we would cover would be things like if you got put onto unpaid leave, if you're a contractor who've lost your contract because of COVID-19, and then we'll cover a couple of months installment, between 3 to 12 months installments of your credit facility. They are linked to a credit facility, so they will settle into your credit facility. And then I think the question that is quite topical is we continuously looking at self-employed. In the industry, self-employed is a category that's previously been excluded from credit life coverage. And if I can maybe spend a minute and explain why that is in life insurance, you price everything on a pool of risks, and you are trying to price well for the pool of risk, and you're trying to avoid selection risk. So, and what that means is you don't want to cover someone for a risk that they can cause to themselves, because you can understand. So think about self-employed. You could literally cause an event that could make you lose your income, and then you can just claim from your life cover. So you're trying to avoid risk like that to ultimately not drive up the price of credit life overall, which is why historically self-employed was something that's excluded in a lot of policies. What we have done, again, in terms of temporary concessions, we do say that, approach us, talk to us, let us look at your individual circumstances, and then on a case-by-case basis, we'll consider it. So definitely, credit life in this environment has been really tested. And I think one of the things that we've always believed in is actually a lot of value in credit life in terms of, when you need it, it settles some of those debt that you have for a time period, and it can ease you over. But, I also feel that it's also a time for us to be a bit more flexible. So we've introduced a couple of concessions as APSA, and we have seen a lot of the players in the industry also doing that, saying, that's more important for the product to live up to its value. But it unfortunately is going to come down to your individual provider, your individual T's and C's to look at what's covered.
Yeah.
Generally,
not all products created equal.
No.
Exactly right.
If I can maybe come in there, Mike, very interesting. Around the SMME, some of the research we've also done, and I think this is where I'm encouraging financial services to step up. The SMMEs, a lot of them with an annual income of lower 1 million. Some of the research we did now, 17% of them said to us, I'm not going to make it. I don't know, but 52% said, I will make a plan. I just don't know what. Now we've asked them, so did you apply for relief? So how are you continuing this business? And our whole National Development Program is built on entrepreneurship. It's built on, pre-COVID, and I think it's still there, is how we stimulate the economy. And about 35% of those SMMEs that we interviewed said, well, I applied for relief. And they were quite different levels of success. But what came through is about 50 or 60% of them, whether they applied to banks or to government, were still waiting for an answer. But we're getting to the end of the line where a lot of them saying, I can't go past mid-July. I can't continue. So the role of these rider benefits and for the insurers to help us to sustain our economy is becoming very important if we start looking at this and how we look at, and I think, Eugene, it's very commendable in terms of how you look at this, but if we generally just took a step back as to how insurers looked at COVID, we kind of marketed and we said, well, let's continue cover and retain. And then a lot of the wording into the marketing was around, well, we will cover you up to, or maybe, or if you had been. And consumers, SMMEs and consumers are confused, and they are trying to access the benefits that what I thought I paid for? And now I've got an expectation, but the experience, and this is where customer experience breaks down. When I've got an expectation and suddenly I've got an experience, and there's an incongruence between that. And I think there's a massive opportunity. It's quite encouraging to hear what you guys are doing, Eugene. But we see from the small businesses that very few of them, I don't know why, have applied for relief. They are entrepreneurial, they want to make a plan, but they're not getting the help. And I think there's an opportunity for the financial services to step in. I had this conversation with someone the other day as well, to step in and saying, so this is what we technically did underwrite, and we have the reinsurers, but how can we look at it from a consumer perspective and from an economic sustainability perspective? And certainly the numbers in terms of the research shows towards that partnerships and bringing that economic stimulus in.
Absolutely. And I mean, it's to everyone's benefit that we ensure that as many SMEs as possible survive this crisis, and then we grow the ecosystem from there. And it's why, just to talk to another banking industry initiative underwritten by the SARB and the Treasury, that 200 billion Rand bridging finance scheme, we need to have a look at why more subscription hasn't taken place there. I think the latest numbers from Intellidex, so around 2 billion has been subscribed for. So something's not working with that. We need to tailor it. And it's great to see how open and flexible, Eugene, back to your point earlier, that the industry players have been in this space to adapt to what is a once in a lifetime, let's face it, crisis that COVID-19 is. I just want to jump onto a point here. And, you know, we've seen this sort of disintermediation happen in financial services where increasingly product providers can go direct to the consumer because they've built up a relationship. Digital allows you to do that. But I still find that going to a broker, if I don't understand something, can help. How are you thinking? And it's a question here from Gerald Clutty. And he says, could we perhaps also look at how ABSA will create an enabling environment for independent brokers in the life insurance field to go out and be another route to market?
Yeah, thank you very much for that question, and I do see that in a very positive light. I mean, we it obviously means that there's value in our product and in our service. I think one of the things that we believe strongly in is focus on what you're good at and focus on that quite well. And I think we still at this stage believe that there's lots of opportunity for us to just access the customer base through our internal channel. And I think if I expand on that a little bit, the real reason for that is that, you know, similarly to how we want to really pride ourselves on showing up for our customers, when it comes to independent financial advisors, you also need, you know, a footprint and a platform to support them in a way that, you know, they get the experience and the footprint they have. I think what we are looking at is, you know, making maybe some of our more digital products in future available to more independent advisors. And so for us at this stage, it's a question of choice, you know, through our own footprint of tied advisors. We sell our life cover products, and it's really because, you know, we'll only focus on stuff and where we can really win and really get it right. But certainly as things emerge and, you know, as we start to see ourselves, you know, executing on the opportunity we've got, that thinking could change. But right now we're focusing on the opportunity at hand and really doing what we're great at. And I think that's sort of always been, which is the bank assurance, selling to the bank angle.
Absolutely. As we approach the end of our hour, which has absolutely flown by, I would just like to let our delegates know that the consultant offer is up. So if you want to be part of the consultant ecosystem, and Inika chats to individual consumers all the time to get their insights that inform much of this research that guides the industry. If you want to be heard, then go on and click on the offer page on the right-hand side of your screen. Inika, as we approach the final 10 minutes, and we look now to the future, what stands out for you from the research that you've recently conducted? You said that consumers obviously going back to basics. There is this InsurTech wave that has been sold to us as somewhat of a panacea, but you said it isn't necessarily all about the chief information officer, I almost said chief investment officer. What does the future look like post-COVID-19?
I think post-COVID, we certainly, as I said earlier, the way we work, the way we interact has been irrevocably changed. I think I've heard actually an independent broker the other day said to me, it's so much easier to now get consumers or potential clients to actually meet across a computer screen and not a coffee shop. So I think that's changed. People understand that I can now talk to someone through a screen and talk about my financials. So if we step a little bit back just in terms of the insurtech, there's about 22 insurtechs in South Africa. The churn rate is very, very high in terms of the insurtechs. So I think it's up to financial services to look at what is the capability and capacity internally, taking from the research that our consumers are back to basics. They want this integrated offering. I want to understand my financial services from every cent that I spend and that it's bringing me value for money. And how can we play a role into that? The tech part, and I won't detract from it, but what we've seen is that in every conference I speak at, I ask, what is the one disruptor? And then everybody's saying to me technology. And technology has not turned out to be the disruptor. COVID became the disruptor. And I think the regulator is going to be a disruptor because the regulator is looking at financial inclusion and we're not getting there. So consumers back to basics. That insurtech is basically a replication of initiatives or payment initiatives right now. How can our financial services with bank insurance taking the lead from traditional look at what consumers are saying around the care, the integration, the accessibility, but making it individualized and recognizing that our consumers were under pressure before COVID. Our consumers are under pressure, and how do we ensure that there's financial services available that, as I said, is accessible, but talks to the consumer, that's in line with what our regulator is looking at. Because otherwise our financial services and our regulator is going to actually work against each other. So I think a lot of the research that we do is extremely important to bridge that gap in terms of what is the voice of the consumer and the consumer giving it back in terms of a model that we know that we can trust. As I said at the beginning, there's a lot of these benchmarks. But there's something that we can trust and that we can take the 2 or 3 things out of that bridges the gap between financial services, the regulator, and the consumer out there. And we actually
on that point,
all of this.
I want to interject quickly. I haven't interrupted too many people today, and I like interrupting. We've had treating customers fairly as this regulatory ideal that has been introduced in our markets for several years now. Is it having an impact? Are you seeing TCF being as impactful as the spirit of the legislation and regulation had originally intended?
No. I'm sorry, but I'm going
The short
to say
answer.
no. I was thinking, how am I going to answer this? I think the spirit of TCF, it's been a long time coming. It's been 12 years, similar to what the FSCA, and it's a couple of markets. And we've seen this drag over a long time. But I think the focus generally at the moment, and still after 12 years, is very much between the regulator and the providers. And the intent is to make sure that there's responsible financial services, that we have products that serve our customers. And I think the change from TCF, so we do measure the TCF in the survey, but it's a bit more of a regulatory financial services discussion yet. And I'm not sure that the consumer is in there. And we're saying very strongly that if we do customer satisfaction right, as we do in the customer satisfaction model that we do in SSCSI, then the intent of TCF is an outcome. Because we will do customer centricity the right way, because we're aligned to what all that we're trying to do with TCF and market conduct, the beneficiary is the customer. If we look at customer centricity and measuring customer centricity through a model like SSCSI, the customer is the beneficiary. So if we focus on customer-centric principles the right way, market conduct is an outcome. It's not a focus.
Absolutely. On that point, Eugene, I think for the longest time, consumers have looked at insurance companies as always looking for ways not to pay. And they were all tarred with the same brush. And that's why it became this grudge purchase. Right in the beginning, you said ABSA's approach has been to put the customer first. And that expectation is paramount to you to be able to show that you do what you say on the tin. And I want to latch this on to a final follow-up question here from Stephen Matthew. Did TTF change culture, or is it a tick box exercise from ABSA's perspective?
Look, I want to answer to say it depends on how the life providers approached it. We have seen that that there are some examples where you could quite easily approach it as a tick box. Let's just say that. From our perspective, though, and I said that right up front, is unless you start to use that as a way to address your culture of actually treating customers fairly, and we actually have gone beyond fair. We've said, if you can get your people to connect with the emotive connection of what you're actually providing, which is that peace of mind, it's that continuation of future generations' possibility. If it becomes a mindset, a way of actually how you drive your culture in your organization, then it's not a tick box. And from our perspective, that's been our approach. I think, to be honest, we probably also all started as that. It's trying to just make sure we're compliant. But I think what I've been really encouraged by is that when we started saying, well, it's not that, it's actually a culture of putting, showing up for the customer, caring for the customer. When you start to do that, it hasn't become a tick box. And what's fascinating is also when our survey results started shifting. So not for ABSA Life, but certainly there is a risk of it being treated like that in the industry. And I also want to say that we've also found that the regulators becoming even more intrusive around TCF, which is a positive thing. I think it's time that they test the providers on what they say and what they actually show up with. So I do think that with that you'll start to see it shift. And that's the big shift we need. Michael, if I may, you interrupted earlier. I just wanted to, on the fintech point. One of the items I wanted to also latch on is how we're thinking about that, is to say, look, we don't think about we need to be building everything ourselves. There's an amazing partnership opportunity where you can, create opportunities for entrepreneurs to partner with us. So what we try to do is sometimes when we're looking for a simpler product, a simpler engagement platform, instead of building that ourselves, we will go and actually partner with some fintech entrepreneurial startups out there. What we then do is to access the license, and we then plug in the capability that they build. So I also think there's a space you don't need to be feeling so threatened by fintech. I think partnerships is an approach where you can bridge that gap, and everyone can win.
Agree, absolutely.
Well,
agree.
I think, Inika, on that point, I don't know if you can keep your concluding comment to a minute, because we've got 2 minutes left before I wrap it up. But I've certainly been very encouraged by the conversation. And what I'm even more encouraged by is the crisis has exercised everyone's mind around the importance of having the right kind of cover. And I think it's such an important conversation. We're very high level kind of financial inclusion. How do we ensure that we make South Africa a more prosperous society? Well, products like this, insurance products, are absolutely critical. What are your concluding thoughts?
So from the research, customer expectations of the life insurance is very high. And from the current measurement, the satisfaction is in good standing alongside short-term insurance and banking. But if we look at the priorities of the financial services that is pressured in a post-COVID, and I see this from very hard measures in terms of financial sustainability, and the customer is sometimes ranked fourth, and I'm speaking generally, we need to change priorities as a financial services and not just look at our own sustainability from a financial and a shareholder perspective for COVID, but from a customer perspective. And I think while we have a good standing now, we've got a lot of work to listen to the research, to listen to consumers and saying, look at me as an individual, connect me, enable me, but care for me, and make sure that there's congruence between what I expect and what I finally get for the insurance that I'm paying for.
Yeah, and in a world today where it's so easy to get onto social media and share a bad experience, it's equally as powerful to get on and share a good experience. And I think that feedback is also driving a really positive shift that we're seeing in the market as well. That's probably a conversation for an entirely other webinar. Guys, thank you very much. We've got to leave it there. Rich insights. Again, thank you, Inika Prinsloo, Head of Client Insights and Divisional Head of Consulta, and Eugene Strauss, Managing Executive of ABSA Life Insurance and Pan-Africa ABSA Life Insurance since March of last year. And just a thought on TCF there. I see that ABSA Life also led the market in the TCF area as well. So plain to see why ABSA is topping that particular ranking. Thank you everyone for joining us. So the webinar brought to you by ABSA and the Mail and Guardian. Go out there and support quality financial services and quality media. From me, Michael, have a great weekend. Cheers, guys.
Thank you.
Bye-bye.